Hi everyone. Would like to talk to you today about climate reporting. I know that we have spoken about this before. I know it's a hot topic at the moment. I thought it would be a good idea to bring all the information together for you and just to articulate what's happening and what the impact of the change will be for you. So let's look at who the regulators and governing bodies are. There are three key regulators involved in the development of the reporting. Firstly, Auditing and Assurance Standards Boards, who are developing the assurance requirements. The Australian Accounting Standards Board, who are developing the financial disclosures. And Australian Treasury, who are currently drafting the draft legislation. Who is in scope? Currently, it is proposed that all entities that meet the prescribed size thresholds and that are required to lodge financial reports under Chapter 2M of the Corps Act would be required to make climate-related financial disclosures. In addition to this, if you are a registered corporation under the NGER Act, you would also be captured. So what will reporting look like? Where an entity is captured for reporting, climate disclosures are published via a new sustainability report as part of your annual financial reporting package. It will sit at the back of the accounts, following the financial report, director's report, auditor's report, and then sustainability report. And it needs to include the following sections: governance, strategy, risk management, and metrics and targets. So it needs to talk to each of those areas. Let's just look at what that needs to say. For governance, you need to include information about the governance processes, controls, and procedures that you have used to monitor and manage climate-related risks and opportunities. Strategy really talks to an entity's strategy for managing climate-related risks and opportunities. Risk management is about how climate-related risks and opportunities are identified, how they are assessed, prioritised and monitored, and how these processes can be integrated into your risk management framework. Metrics and targets really is about the measuring, so how an entity measures, monitors and manages climate-related risks and opportunities, how it assesses its performance, and how it is progressing towards the targets which it has set for itself. How will this all be implemented? As you know, it's phased implementation. The table over here on the right really talks to that and articulates how you can identify what group you're in. Obviously, the larger entities in the market will be reporting or will be captured from 1 Jan next year. And we're anticipating that the bulk of our entities will be captured, if they are captured, in Group 3, which means reporting commencing from 2027 to 2028. Now, as you know, we're a member of the FSC, the Financial Services Council, and we're actively involved in working groups and discussions with them around the development of this legislation. We were attending a session only a few weeks ago, and this question came up around the $5 billion asset owner test. And there's quite a lot of ambiguity in the market about how to apply that test where you're a Group 3 entity. Does it mean that where you are below 5 billion, you are not captured for reporting, or does it mean where you are below 5 billion, you need to revert to the size test and meet two of these three tests here, which is 100 employees, a consolidated asset test, and a consolidated revenue test. So this ambiguity has been raised, these questions have been raised and discussed at the FSC. The FSC has provided its feedback to the Senate committee in April, during its April submission. And at our last meeting, we were discussing the outcome of this. It hasn't yet been given, but we will keep you up to date on any clarifications which we receive on that. Obviously, that will have an impact for those Group 3 entities. And the other point to note from that consultation was this discussion around whether Group 3 entities only need to provide climate-related disclosures if they have identified material climate-related risks or opportunities for that period. Just a suggestion, obviously not, definitely not finalised. Group 3 entities who can't identify any material risks or opportunities are then asked to disclose the fact and keep records to explain how they've reached that conclusion, so methods, assumptions and evidence. And again, we will keep you updated with any clarification around that we get. So from here, for us, as I said, we're part of the FSC working group to help develop the legislation. And there is a perpetual wide working group which the MFS Reg Change team are participating in, and that really enables us to tap into other knowledge centres and areas of expertise across the business. And in due course, we will be establishing our own MFS project working group to help build out processes and meet the requirements of the reporting. And we'll obviously be reporting and communicating all of this with you. So I hope that has helped. Please feel free to reach out to your client managers if you have any additional questions about this. Thanks, everyone.